and then go
You're
from there.
live. You're live.
Okay, great. Welcome everybody. Today is March 30th, and start off with our webinar teaser, go into the trade doc, and then look at some news, some charts, do some Q&A. So last week I was saying by Easter, the CV would have Trump on his knees and that there's no way on God's green earth that we'd be able to open back the economy. And so that was quickly changed over the weekend. So now they're saying end of April. We had Bill Gates on CNN saying that we really need a 10-week shutdown to really get this, to get the clock reset, essentially. So that's actually longer than what I've been saying, which is 60 days. And that's all based on the life cycle of catching it, how long you will be incubating it. In other words, you'll be growing it in your body without knowing. No symptoms, can be up to 21 days. Usually it's less, but up to 21 days. Then once it really has taken hold and is showing symptoms, you've got another 2 to 3 weeks. And then after you've beat it, you got another week of shedding it before you're really good to go and not going to infect other people. So that's why a 60-day shutdown would do the trick. Essentially, we'd be able to reset the clock, go back in time, and imagine if we were back in China in late November when they were first having doctors talk about this, or early December. If they had told the whole world what was going on, went into a lockdown, this could have all been avoided. We could have been aggressively hunting it down and quarantining anybody with this, doing massive testing, and wouldn't be having a situation like we have currently. So that's why really the only solution to save the economy is really not just one country doing this. Because imagine if the United States did a 60-day lockdown and then everyone else just kind of did a half measure. Well, it would work internally, but we'd have to shut down all international travel. Otherwise, some Tom, Dick, and Harry is going to fly over and restart the spread. So my expectation is that everybody in charge knows this. They need to essentially shut down everything globally for, Bill Gates knows better than me. Let's go to 10 weeks instead of 8. Not a, we trust you shutdown. It has to be a pretty hardcore shutdown. And the bottom line is everybody has it's going to go through the life cycle and then develop antibodies and reset the clock. So there'll be very few people actively spreading it. And we reemerge into the world with masks. So apparently 3M is mass producing masks right now. We've got every manufacturer creating the ventilators. And here's a shot from New York City where they're pulling up all these tents and different mortuary vehicles. So it's getting grimmer by the day. So that's my expectation. The idea that we're going to let it rip through society is totally unrealistic. Because if you end up with a huge percentage of people contracting the disease and then just lowball 10% end up in a hospitalization situation, we're now looking at tens of millions of people flooding hospital systems, and there's not that many spaces available. Back before this all began, we had 100,000 ICUs and only 10,000 spots available. At this point, those are all taken up, and now we're trying to build makeshift tents all over the country. So really, the governments have no choice and absolutely zero chance of being reelected if they let it just rip through society. So I think that's not even an option on the table. And we've seen Trump slowly babysit the psychology of your average American to realize that things have dramatically changed, that this is something that's deadly to all ages. And it's obviously something that's going to affect our lives for quite some time. So the bottom line is we need to reset the clock, reemerge with masks. 3M is mass producing those now. They've been telling everybody not to wear them because we just don't have enough, and we didn't want to create Mad Max situation with people fighting. Imagine You tell everybody you need to wear a mask, then all of a sudden the doctors and nurses don't have access to them. So that's essentially what I see coming down the pipeline, and there's really no way around it. Okay, so let's go look at our trade alert now. Start off with the buy and hold, folks. If you're in our buy and hold program, you get this updated once a week on Mondays, and you get access to this webinar. You also get to kind of sneak into what we're doing in our basic program, but the basic members do meet Monday, Wednesday, Friday. So no changes in the basic portfolio. We're sitting on a negative 2.2% return so far this year. The TLT and GDX positions performing well. We're having a little drawdown in our inverse ETFs, betting down on China and US equities. So I'm still highly confident that as soon as all the funny money is spent, that we're going to have a epic stock crash, which is not something I wish on America, just very, very basic math to understand that our economy is going to have limited output, and that's negative for equities, and handing people a little bit of cash. Less than 10% of the stimulus is actually going to real people. So they're going to spend that fast as they get it. I bet you the average Joe spends it within 72 hours getting their stimulus check as the layoffs pile up. And so there's just very little hope for stocks to really rebound here, even though you got everybody in the media pushing that. I highly, highly doubt that we have a recovery anytime soon. Okay, so in our buy and hold portfolio, we have the following allocation per $1,000. We still have 6 shares of TECS, that's the Inverse Tech Technology ETF. We have 1 share of the FAS ETF, Inverse Bank ETF. We have 2 shares of Yang, that's betting down on Chinese equities. They're large cap stocks in specific. We have 3 shares of the TLT, that's your 30-year treasury. This is what I believe will be the single highest return on investment for the next 2 years and will suffocate all other asset classes. Why? The big banks are the ones who buy this. They're the ones who control the central banks. And it's really a mechanism of them cutting interest rates and then doing quantitative easing that artificially drives bond prices lower and allows these big banks to cash out. So if you understand that we have to blow out our deficit, that we're doing tax holidays, you can understand that the US government's going to be printing massive, massive deficits. In a normal world, if your income drops and your credit rating drops because of that, and you're trying to borrow more money, then the interest rate would rise. But that's not the way our system is set up. We have a Federal Reserve which cuts interest rates when we're in trouble and prints money to buy the bonds to guarantee the banks loaning the government money generate a profit, even if it comes at devaluing the dollar. So when we understand that, we can realize that with the $2.2 trillion stimulus plan, and they're just getting started, and that this phenomenon is happening worldwide, then we can understand that all the money and resources of pretty much every economy worldwide is going to have no choice but to be driven into funding the government. So that's my big prediction. And this may mean that gold bugs are early. We saw the TLT pop to 180 2 weeks ago, and it's starting to climb right back to that level. So at first I was thinking we would get a big pop in gold right away, but now I'm starting to wonder if the central banks are going to try to suppress gold prices and manipulate that to, again, help force all money into either stocks or into bonds. If you think about it, there's no benefit into normal investors buying gold. That doesn't help us solve any of the problems in this current crisis. So I think the central banks are going to try to punish anyone who's buying gold as it's ripping higher and just dump gold to create these little shock waves. We know that JP Morgan and HSBC, who control the biggest gold ETF, GLD, have a constant short position. And they've also had people go to jail for manipulating gold. So I think that's going to be something we're going to see is a lot of volatility in the gold market. So we have a small position in the gold miners who are less affected by the volatility of the GLD ETF. I love their business model with cheap oil, money printing at all-time highs. I think this is going to be a slow grind, and we may see the big pop in precious metals in about a year. Alongside that, we have $166 in cash. And so bottom line is I expect a vicious stock crash in 2020 and a slow grind on the TLT. So those are my two major predictions for the markets. This is our buy and hold portfolio. And so again, we'll update this every Monday. We don't change it outside of Monday. This is our lowest entry point program, no options. We use only ETFs. You only trade once a week. And so that's as simple as that. Now I'm going to go to the basic program. This is where we do use options. And so right now we're using the analogy that we're building a house, and the foundation, the concrete you're going to lay to build your house is this set of put options. I got in on right here on March 20th, 10 days early. So the day after we put this trade, the market was considerably lower in the futures market Sunday, and then they came in with literally $6 trillion of stimulus to try to keep the stock market on life support, and if nothing else, slow down the market's crash. So the good news is that if you're just now starting to follow the program, you can get in at a considerable discount to lay the foundation. And I'll be interested in potentially doubling these 4 puts on Friday if we still don't have some downside action. And we're slowly but surely seeing the market get weaker and weaker. So I probably won't increase this position size, but if we're not already starting to see the market sell off by Friday, do expect me to double up this set of puts right here. So again, these will act as two things for us. Number one, it's going to allow us to have a profit opportunity in a stock crash. And the profit opportunity is in the hundreds and thousands of %, depending on which strike and when we let go of it, if there is a sell-off. That's one. But two is our intentions are to rotate into a set of, let me pull this up. Our intentions are to rotate into a set of ETFs as the market is viciously selling off. And these are the companies that are going to directly benefit from the paradigm shift happening in the markets. So the 5 ETFs that I'm highly interested in buying during a crash. So again, we're going to enter these by selling puts while we own the SPY puts. So it's going to be a very safe way to enter this when they look like they're falling off a cliff. So I like healthcare. The amount of money that's going to have to flow into the healthcare sector to deal with all of the critical cases is going to be massive. So that's Xlv Biotech. We're in the dark ages of creating vaccinations for viruses. And it's mainly because the viruses are so tiny compared to bacteria. So we really need some big breakthroughs in this technology. And I believe government's going to just hand over fist to this sector. The medical device ETF, as we'll look at in a minute, has already been outperforming the S&P 500 dramatically. It's showing less drawdown during this crash. And we're in a rush to create ventilators, masks, and all this equipment. Right now, we have enough for maybe 100,000 patients at a time, but we need to be able to support more like 1 to 2 million at a time. And that's if we can really reset the clock, deal with this current set of people who are already infected, and then slowly allow it to process through society here. And again, a vaccine is really hopeful thinking. We never got one that works for HIV, made one for SARS. And unfortunately, when we tested on mice, the mice died. Their own immune system killed itself when they reintroduced the SARS virus. And the SARS virus, the outside of that looks extremely similar to the current one we're dealing with. E-commerce obviously going to benefit as long as their supply chains don't break down and their staff doesn't quit. Amazon's already having the disease spread throughout their warehouses. People are starting to protest. And next thing you know, maybe China starts to block supply chains. So that's something I'm concerned about, and why I'm not loading up on that specific ETF currently is I do believe all of these are going to crash together, and then the strong companies that will have profits and revenue growth and not just be kept on life support, I believe will do very well as soon as we bottom out. And then the next big prediction is that, again, China could have stopped all this. They could have told everyone in November, December, but instead they threw parties. It's almost as if they wanted this to massively spread in Wuhan and then announced it around January 22nd. Also, they shut down special schools for the elite children way back in January 2nd. So they clearly knew exactly what was going on. They knew this was the highest traffic time period, and they covered it up, continue to cover it up, and now use their propaganda to sit there and make fun of us. So I do expect there will be retaliation after we've coped with this blow. So I do like the ETF ITA. Again, I expect all of these to have a significant sell-off before we want to buy into these 5 ETFs. Okay, I'm gonna go back to the trade alert. So here's a look at the Great Depression era. That's what a lot of people are correlating this to. Just very tough time period coming up. Unemployment, even by the Fed Bullard standard, was estimated to hit as high as 30%. So it's going to be a tough couple months coming up, no matter how you dice it. So we're recommending this set of 5 puts. If you already have those, then no changes. Again, I'm considering doubling down on these 4, but not this one, as early as Friday, but no guarantee. So that's current setup. If you're existing member, no changes today. We've really just been sitting on our hands waiting for this to all play out. TLT continues to grind higher. And again, stock market's just burning through the funny money that the Fed has handed out through every different sort of repo you can imagine. They've got a repo for corporate bonds. They've got a repo for mutual funds. They got a repo for primary dealers. They've got just every little free money apparatus you could dream of outside of buying stocks directly. And I do think the Fed will have to step in and eventually buy stocks, but they won't do that until it's crashed much, much lower. Okay, so that's the foundation of our house. If you're in the pro membership, then you have the bond market that really acts as the roof of the house we're building. And again, the ETFs we want to buy will act as the walls. Right now, your cash position are your walls, and we're going to convert those walls from cash into those ETFs when the time comes. But we haven't got anywhere near peak panic. I suspect it's after one of 2 things. Either number 1, the governments coordinate a global shutdown that lasts for no less than 60 days, and then the world reemerges with masks as we await for a vaccination. And if that's the case, I think that will have the least economic disruptions, the least lives lost, and also the best chance for Mr. Trump to have a chance to get reelected. If they continue down the current path where they don't want to shut down the economy, they want to try to keep whoever working that they can, then the other outcome is that the death toll gets into the millions worldwide before we're getting anywhere near a herd immunity. So if they want to just let it rip through, then you can expect hospital systems to be overran in short order, and I believe chaos ensuing. So if they do take that route, I think that it will be short-lived because our hospitals just can't keep up with the exponential growth of anything that creates a 10% complication rate. And so 10% is low on the low end of how many people are ending up with essentially needing incubation or hospitalization. So who cares about mortality rates? That's not what really kills our economy. It's when people stop breathing and they're having hypoxia and ending up with respiratory failure. That's what's really going to collapse the economy, make people not want to work, all that jazz. Okay, so I'm going to go back to the trade alert. If you're in our pro membership and you have the bootcamp trades, we're currently up 3% in March. We're up 15%. So we made the right call that the stocks were going to keep crashing a few weeks ago. TLT was at 180. We alerted everybody, take profits if you have bills to pay. Otherwise, we're holding. And then Ray Dalio, of all people, blew out. Central banks blew out. People had to sell not what they wanted to sell, which was stocks, gold, crypto, those sort of assets. They had to sell what they could sell, which was the high demand treasuries. So we'll take a look at charts, but we're starting to climb back. And again, if you know my prediction on the TLT, it's massive. It's going to be a nice slow grind with low volatility, and is really my favorite play. And again, it goes against all logic. Normally, if your income drops, which America's income for tax receipts has dramatically dropped, if you're spending more than you were previously, borrowing more, then interest rates should rise. But we live in an upside down world, and so the exact opposite's going to occur. So that's the big 10,000 foot view, is if we have reduced economic output and governments have to borrow more money than they ever have in history, and those investors have to be rewarded, then you can understand why just about every other asset class will likely end up severely punished. And at this point, I'm now thinking that stocks, gold, real estate, and cryptocurrencies are going to have a significant episode of volatility in the near future. So we will reconsider what we're doing with our long gold position and protection. Now, the fundamentals for gold make a lot of sense because they're not an asset that's anything like a normal stock. So there's just a correlated setup where people who end up selling stocks are dumping everything that's correlated to it at the same time without thinking twice. So I will potentially optimize our precious metal portfolio Tuesday for pro members. Just a heads up on that. Okay, so that's our return. If you have the bonus trade, which again was a silver leap, we're not going to let go of that. That's working beautifully. And we also have that QQQ put. So that's the only difference in our boot camp, is we have two very aggressive options that are up significantly, helping boost our return. If you're in a pro membership without the bonus trades, you're still up a little bit in March. Again, I know we're up 15% to start off March. We should have took profits. We've learned from that. We will take profits as we approach that 1% 30-year treasury interest rate. As I go back to the example of Pavlov's dog, whole market's been trained to take profits. So expect to take some big profits as we approach 180 and then try to buy back in on a dip, as I do think that long-term TLT is going to blow past 180 and go significantly higher. Now, if you're in our basic membership, we're having a little drawdown. We were scared that the stock crash was going to begin on 320, and it did. Actually, we saw it crash considerably. Futures market was limit down, and then they came in with trillions in stimulus. So the only open position for basic members is our position to be short the S&P 500 with that set of 5 ETFs. And remember, we have 2 years time premium at the longest duration. And in the shortest duration, we're looking at an expiration in June. So we have so much time. And again, this is really, if you only did one trade this year, this is the single most dead obvious trade with the highest return and the least risk. Now, the bond market, I think, is going to be a 2-year run and even bigger opportunity. But if you're looking for a fast drop and a huge appreciation in an option contract, I love being short the S&P 500. It's just a matter of time. The clock is not on your side. If you're trying to bet up on stocks, I would sort of relate that to trying to run. You see a train coming by and there's a quarter on the train track. Well, if you're really fast, you could run and grab that quarter and get out of the way. But it doesn't mean the train's not coming. So be careful for anybody trying to time a little bounce in the stock market. From my point of view, it's more time to educate our audience, get you positioned, and lay the foundation. Okay, so again, the put options are going to serve two purposes. One, they can generate massive returns. It could literally be the only trade of 2020, but there's a lot of opportunity. The walls of your house will be rotating into these ETFs. Pull those up. Healthcare, biotech, medical devices, e-commerce, and aero defense. Again, these are going to be the main benefactors from all the bailouts that the government's going to essentially pull money out of the economy through selling treasuries, and then they're going to hand it off to these critical companies that are going to get us out of this crisis. So right now your walls are made of cash, but soon we're going to exchange them into these 5 ETFs. Now, if you're in the pro program, your bond market position is the roof, and that completes your house. So it's just an easy way to think about this that many of us can relate to. So we have a little drawdown in our put options, but absolutely not worried and ready to double up on that as early as Friday. But we'll see how the news flow is looking. You're going to get in for much less than I did, around 30 to 50% off, probably more like 30%. But I do have screenshots of what I got in for. Okay, so let's take a look at some news, some charts, and then we'll go into Q&A. Okay, so first of all, this is the single most important thing to be watching. The big question we have to be concerned about is how fast they're going to sell that $2 trillion in debt. Right now, the 30-year Treasury, which represents a huge chunk of our portfolio, only is a $800 billion asset class. So $2 trillion will dramatically increase the size of that in a very short period of time. So far, I've been seeing them dramatically increase the T-bills, but we don't have a clue what they're doing with that 30-year Treasury yet. And it does sound like they want to sell most of that debt on the 30-year. Okay, so will they let the yields pop up a little bit as they fill that? Are they going to sell it all at once? Or are they going to spread it out over 2 years? So that's something that is of great interest currently. They're also having technical issues trying to issue a 50 and 100-year bond. So that would make the TLT even more leverage. Right now, owning the TLT, something like having 30 times the leverage of a 1-year T-bill. So when they add in the 50 and the 100-year product, this is going to become extremely leveraged. And again, if you think the banks are going to lose money lending money to the government, you got another thing coming at you. They don't lose money, especially not when they're risking trillions of dollars to fund this whole extravaganza. Okay, so we are seeing a little bit of increase in debt issuance. My prediction again was first that they came out saying, oh, we're going to need an $8 billion bill. And I was very quick to respond. It's going to cost trillions, not billions. So now they've come out and it's about $6 trillion between the Fed and the government stimulus plan. And they're saying this is only going to last 8 weeks. So they're probably going to have to spend much more than that. And all of this debt issuance ends up at the end of the day right here in the Treasury auctions. So we're keeping a close eye on that. Here's our yield curve. Let me just look at the animation of this. So the inverted yield curve called the stock crash, as always. The Feds come in and cut rates to zero. So you can see the front end drops dramatically and the long end is slowly dipping down. When we get close to the 1% yield, expect in the pro system to take a lot of profits off the table, and to look for a little bit of a sell-off to get right back in. The big picture is I think these yields have to travel lower for a long period of time. As long as they need to sell these massive deficits, they have to force that yield to slowly but surely grind lower so that the big banks buying this debt generate a profit from the underlying bond and not rely on a profitable yield, which obviously is lower than their 2% target. So they're not buying these bonds because of the treasury yield. They're buying it because they believe rates will go lower and that the Fed will buy these bonds for a big profit. And so the game plan, as always, is if you have a problem that the banks can't fix all on their own, then you have to use the government to do it. So they sell a bunch of debt. The big banks chip in, all the primary dealers, that's your Goldman Sachs, your JP Morgan. They buy this debt. The Fed cuts rates, and then they do QE to vacuum up the debt for a profit. The banks turn around and buy stocks after the crisis has been fixed, as the losses have been absorbed into the economy, and they buy up stocks, usually half off, but I expect this to be greater than half off. And think about it, if a $300 billion screw up in 2008 could create a 50% stock crash, this is the magnitude of this fiasco is in the tens of trillions of dollars. It's not just localized in America. This is a globalized problem. So the stock crash could very well be 75 to 90%. And finally, your Fed comes in and buys up stocks as a last resort. So I do think that the potential for a greater than 50% correction is in the cards. And the banks are all motivated to allow this to happen. They're motivated to buy the debt, let the Fed flip it for a profit as these rates crash. They need to make this last until all the money's been raised. So keeping track of how fast they sell the debt is critical here. I expect it will take them no less than 2 years to clear out $2 trillion in debt just here in locally. And if they're going to start adding to that, I think about if they're giving out about $1,200 per family, they're going to blow through that in less than 72 hours. So I think you're going to see probably at least a couple more trillion going out to families. Hopefully it's not buried. Right now, 90% of the stimulus is just going to pure waste to benefit insiders who pay off the government. So it's a real shame. Hopefully they can get a new stimulus out soon that benefits real people. But regardless, probably our deficits are going to go just absolutely massive for several years. And during that whole period, the bond market has to appreciate. Otherwise, this isn't funded, and we end up in a much worse situation. So again, I think we'll see some profit taking in our portfolio as we approach 1, again when we approach 0.5, and again when we approach the zero bound. And this should take a course of 2 years, and so it'll be a nice, slow, easy target to hit for us. Look at some of the articles I've retweeted, and then we'll look at some charts and go into Q&A. Now, let me take a quick look at some of the questions and I'll go back to the content. Okay, so when do you see the low for the SPY and by when? I think the SPY is going to bottom out when the Fed finally cracks and buys the ETF. Now, it's not clear how they would do that. I believe the legal system would have to be changed for them to have the rights to that. But somehow they pulled off buying LQD, which is corporate bonds. And I believe it will be within 6 to 12 months that we hit a bottom, and that the magnitude will be far greater than 50%. So I think the catalyst that will stop it will again be the Fed comes in and says, all right, we're willing to put a floor on the market. Now that doesn't necessarily mean things will start popping up after that. That just means it may bottom out. Steve Lane over the weekend on a multitude of calculations. Fair value is 2,100. So, well, so yeah, I think S&P 500 is based on earnings and not just moving averages, unfortunately. So we don't know what the real impact to the earnings of these corporations are. My guess is they're going to be just devastated. Very few industries will have earnings that are anything like we've seen in the past. So we'll get a fair value as soon as we have some earnings. You got to give that some time. But yeah, I wouldn't base any calculations on a fair value of S&P 500 until you see what the earnings are, because it's not, the world works on profits and revenues, not on moving averages. Bill Richardson says, would it be prudent to buy some puts on our gold position for protection? Yes, we have the married put on all of our every pro position. So on the TLT, we have the 145, and on GDX, we have the 23. So I'll just pull that up so that Bill can make sure he's got it correct.
Great question, Bill.
Yeah, so you know what I would do, Bill, is these are my least two favorite positions right here, these short-term GLD calls. I haven't sold them yet in our portfolio, and I'm finding that they are correlated to stock, so I'll probably let go of those soon. The GDX is a little bit different of a beast, and I'm willing to slowly but surely build into that with the married put. So I have the 23 May 15th put protecting my gold miners. So my total risk in the gold position for the next 2 months is less than 1.5% that I could possibly lose. And I'm looking at a little bit different approach to how to play the call options on GLD. So if anything, I haven't sold these yet. I'll probably hold them close to expiration. So I do think that we can get out for a little bit better return than we have currently there.
Yeah, I didn't see the puts on your sheet on your recommendations, so you looked kind of naked.
Yeah, so I'll pull up the Thursday alert just so we can go through it real quick. Okay, so here's your Thursday alert, which I don't know if you saw or not, but
no, Bill just joined yesterday, Jason.
Okay, cool. So yeah, we have the May 15th.
Oh yeah. Okay, I see the calls, but I didn't see that put. Okay, good.
No worries, and yeah, that way you have a lot of downside protection. So I'll cover what my expectations of gold are in a minute here, but just want to make sure you have that. Yep. Okay, Connor says, what are your thoughts on potential treatments versus vaccination? Well, so Connor, yeah, so they're all betting big on chloroquine. You got to realize 95% of everybody who catches this heals on their own. So they'll go take 10 people, give them chloroquine of whatever form, plus some antibiotics, and then a bunch of people survive, and they're saying, you know, hell, we got a solution. But when you realize 95% heal on their own already, then you got to really, you know, realize that that's not a good case study. So we need a blind case study on thousands of people. So yeah, maybe it helps, maybe it doesn't, but it doesn't matter. The problem is that we have a disease that spreads mainly from the young. So the young get it, they don't realize they have it, and they go spread it to their parents, and then the parents don't realize they have it. Maybe they get a bad cold. 10%, it actually seems like about 80% are at risk of catching it. So 8 out of 10 people, if they get a few of this virus in their mouth, eyes, they're going to be infected. It's going to start to grow in you. 1 out of 10 at a minimum are going to have it take over your lungs and start to suffocate you. Okay, so you're going to have to end up in the hospital. That simple fact right there is the main thing that's going to crush the economy and force us to go into lockdowns. Now, if we can give everybody the chloroquine and it helps, let's say half the people survive it, that's great, but it's still not going to solve that we cannot give 7 billion people chloroquine. So I think that helps for sure. Maybe. We really don't have any data to say, yeah, it does help. We don't have a blind tested study on 1,000 people to even have a clue that it really works. So when somebody says, look, they did it with 6 people and they had great results, well, 95% survive with no treatment, period, all on their own. So that rapid testing is great, but it doesn't change the inevitable. What I'm actually more interested in the test that will tell if you've already had it. Because if you can take a test and it says you've already had it, now you're good to go back to work and you're not going to spread it, that's going to help get our economy back going sooner than later. For a little while, I was concerned that maybe a huge percentage of the population already had it. And if so, that would have been great news because we would have only put the pressure we've seen currently on the hospital system. But the more I look at it, I think maybe 1 in 10,000 humans currently has contracted it. Maybe 1 in 1,000. So we're at the very infancy of the problems unfolding. And so we've taken measures to slow down the spread. We were looking at a 10-fold increase every 2 weeks with the current precautions. Now in India, in Africa, the poor folks are revolting. Yeah, the lockdowns are not working there. So they're all getting into big gatherings and protesting and turning into mobs. In America, we're seeing a lot of a slowdown. So I think maybe that timeline's now with our current precautions in place, maybe every 3 to 4 weeks, we get a 10-fold increase instead of every 2 weeks. And I do believe we're going to quickly see a pretty substantial global effort to slow down the spread. Because the simple fact is we don't have enough ventilators. We don't have enough chloroquine, even if that was a solution. We don't have enough anything. We don't have enough masks. So they need to slow it down. Otherwise, the repercussions will be far worse. So we'll see just how long $6 trillion burns through the market. And remember, the stock market's valued, it's probably about 25 trillion in the US market. So that only, and very little of that's actually going to stocks. I mean, they're loaning companies money so that they can try to avoid layoffs and so that, they can do a little bit of stock buybacks. But if you get 1 to 2% of population consistently selling for a prolonged period of time, it ends up being trillions of sell orders, and there's no way they can keep that up for very long. So time's not on your side. The more people that get laid off, the more people are going to go liquidate stocks and real estate so they have cash. So the effect of a 60, now Bill Gates is pushing 10-week lockdown will be more layoffs, more selling, more pressure. So yeah, unfortunately, I see 0 ways out of this. Bill says the nearest 4/3/20 is only 3 days out. Is that worth buying? Yeah, I mean, that's the least time on your side. So if you wanted to skip one, if you wanted to skip any trades, Bill, I'd say skip that one. But I do like it. I don't think it's a bad trade. The GLD call options I'm the least excited about and may address Tuesday. So if you skip any, I would definitely consider skipping those. The GDX put, absolutely recommended. But yeah, I do like the TLT in general. I think it's just going to be a slow grind higher. The only real risk we have is the introduction of the 50-year treasury, the 100-year treasury, and then the potential for the assets under management in that product to grow rapidly in a short period of time. So it's not quite clear how fast they're going to sell that debt and if they're going to let the yield budge. So far, it looks like they're not. In fact, you can see the TLTs marching up higher. So we'll take a look at charts in a minute. I'll just throw up a chart of the TLT here. So here we go back on our grind. Let me get some more Q&A going here. Hold on, I think it's hiding. There it is. We'll get charts and news in a second, guys. Let me just catch up with all these questions. Okay, Barry says he's invested in the TLT options, the SPY puts, GDX, JDX juniors, and GLD. How do I protect the metal position? I have a married put. So for every 100 shares of GDX, I own the May 15th, 23 put. Jack Tan says, what's the timeline for the SPY? I believe well before our expiration dates. But yeah, I think within 30 days or less that the stock market will begin its descent. It started to the day after we put our trade. Remember, it was limit down in the futures market, and they came in with a couple $1 trillion to try to save it, at least give people another chance to get out. Although they're pitching it as this is the bottom and all the big hedge funds are coming in and BlackRock's telling you time to buy and this and that. Meanwhile, they're loading their books on bonds. Okay, Bill Richardson says, where do I enter the option purchases on the spreadsheet? I will definitely cover some spreadsheet work in a little bit so you can see how to fill it out. Very good question. Love it, Bill. You're on top of everything we have. Corey says, should we buy more TLT calls? Well, I decided to hold back last week and not add to it because I do want to see, I want to see the effects of the stimulus. So normally if we get, record-breaking stock market rally, it comes at the cost of the bond market getting punished. And so that was really your big giveaway last week is bonds rallied as stocks rallied, which is not natural. So we should have seen a lot of drawdown in our portfolio. Instead, we're making money because of our bond position. So that tells me that essentially you have funny money keeping the stock market up. You've got insiders getting out and you got the big banks buying bonds. So that's really the writing on the wall here. The risk in the TLT position is just simply put that the size of that asset class is about to double or triple, and we don't know the timeline. So I'm waiting to see how fast they're going to sell this debt, which is tracked right here. And they do this typically on the first week of each month. So right now they're going to announce the quantity on the 2nd. So that is Thursday. They'll tell us how much of this 30-year they're going to sell, and it'll be sold on the 9th. So we'll see if I add to the position this Thursday, Corey. I'm only adjusting that on primarily on Tuesdays and Thursdays. So that would be the earliest I would add to it myself. In general, yes, I think TLT is a good play, but I like the amount of risk I have currently, and so I haven't adjusted that myself. Okay, Tyler G says, should I be buying all of these? So far, I've only seen GDX. So Tyler G, are you following the buy and hold? Or are you following the options system? This is a good, I'm going to take a break and explain our 3 products, and this will help answer all these questions.
Hey, Jason, Tyler's in the pro system. Yeah, I messaged him to not worry about that.
Oh, okay, great. So yeah, uh, good excuse to review our 3 products real quick. Okay, so we do offer 3 products. We have a buy and hold portfolio. This is good for accounts under 30,000. And it only uses ETFs, so there's no options. In a boring market like last year, it just kills it. It's just so easy to just be long stocks and bonds and have a little exposure to emerging markets and precious metals or whichever commodity makes the most sense. But when you have a vicious market like this, where there's some big swings ahead, the option market gives you a lot of leverage for very low risk. So it's really a huge advantage in conditions like 2020 to have our puts, to have our different option contracts. So that's why I do recommend, if you have the capital, to be in either the basic system. That's where we trade US equities exclusively. That's Monday, Wednesday, Friday. Currently, that's the puts. That's your foundation, the concrete of your house. Right now, your walls are made of cash, and your roof for that matter. And we're going to convert your cash into healthcare, medical device, biotech, e-commerce, and defense stocks. Now, a lot of people just don't understand the mechanism that really drives the market. It's this relationship between stocks and bonds. They're constantly in a tug of war for capital. And so in our pro system, your roof is made out of the US 30-year treasury. And again, I believe that will be the single best returning asset with the least volatility, the least risk for probably two years minimum. So in the pro portfolio, you get the best of all assets. You're going to have the put options serve as the foundation to your house. The walls are currently cash. We're going to convert that into those ETFs as soon as the time has come. And then your roof is just rock solid, and it's made out of the 30-year treasury. And then we say the electricity is your commodity play. Right now, that's gold. But at some point, I'd like to get into oil and gas, which I think could sell for pennies on the dollar. I do believe we'll get equities maybe for quarters on the dollar, so 25% of their normal value. But I think you're going to see oil and natural gas potentially sell for dimes on the dollar, so 90% sell off, which is scary. But we're seeing Russia try to ensure this happens. So it does look like a coordinated attack on America with all this coming at us at once. So those are our 3 products. The pro portfolio will make adjustments primarily on Thursday. If I think it's urgent, I'll make updates on Tuesday. Finally, if you do upgrade to any one of our packages, you get 30 days free in our boot camp. Now, the boot camp's where I'll put some really speculative trades out. And right now, those plays are actually doing very well. We put on a short position on the QQQ about a month ago. That's up a few %. And then we have a 2-year leap option in the silver market, which is up significantly as well. So there's some bonus trades. The main reason to do the boot camp is for education. So for 30 days, you get that thrown in for free. We meet every Thursday after the pro webinar. That's about a 2-hour educational weekly reoccurring webinar. And then on Tuesdays, I send you extra content to study, whether it's YouTube channels to follow or a couple page letter on what I think is happening in the markets. So this is more on the education side, but it does have some bonus trades. Okay, let's go back to the questions. William McNeely says, are you recommending 200 shares of the TLT and 400 shares of GDX with a put? Yep. So we haven't changed anything, William. 200 TLT. Here, I can pull it up. So this is, again, what we recommended last Thursday to pro. So you have these puts and these TLT calls. And yep, that's it. For that question, William. Okay, we got a lot more questions. Let me catch up. Bill says 1 GDX put per 100 GDX long. Yes, sir. That's called the married put. And so basically we want the underlying asset to go up in greater value than the cost of our put. And we're ready to let that put expire worthless. We've seen some pretty extreme swings in GDX. I mean, it wasn't long ago, it was at 19. It wasn't long ago, it was at 26. So that business I love. I really love that business model. Low oil. You got central banks fighting over gold. We've got them manipulating the price of gold. We have a huge discrepancy between spot gold and or paper gold versus real gold. So you can see there's a huge disconnect. The banks are trying to scare people out of this asset class, and I assume they will continue to do that. But I do think we'll just see a slow but sure grind higher in gold. And after the bonds are paid out, so after the money's been raised by the government, after the government has rewarded the big banks for making that investment, which they do through lowering rates and doing QE, as that money gets recirculated back into the economy, into stocks, that's when I think we're going to see the vicious jump in gold. But we also got to keep in mind, normally you do rate cuts, and then after the problem's resolved, you do QE. Now the problem's so enormous is that we're doing rate cuts and QE at the same time. So that's why I'd like to have a small position in gold and slowly leg up into that. But I'm afraid the bond market is going to hog all the fun for quite some time. Mark B says, this is such serious stuff. You should do a guest interview with Hedgeye. Yeah, those cartoons are great. And thanks for the compliment, Mark. Craig Bartel, do you know what percentage of the overall market cap is sitting in 401ks and IRAs as opposed to everything else making up the 25 trillion? I don't know the breakdown of the retirement funds versus, I'll look into that though.
Yeah, nice question, Craig.
Jack Tan says the GDX put. I think we got that covered now, right, Jack? Yeah, those TLT calls are doing well for us.
Can you just send me, Jason, can you send me those alert trade for me to my text or something for all those complete pro members?
Yeah, I'll forward you Thursday's email, or you could just go look at Thursday's email if you want. You get your emails, right?
Yeah, but I think my email was corrupted. That's why if you can resend it to me with jet1@gmail.com, the new one.
Okay.
Appreciate it. Thank you.
Got it. You got it, buddy. No problem. I just texted Ryan to get that done for you.
Thank you.
Okay, Malik has a 207,417 put. Yeah, not a lot of time premium on that one, Malik. So I think times, I would have had more time on a put option like that. So I'm not sure what will happen in what is that? That gives you 18 days trading days, 18 total days. And the 207, that's pretty far out. So yeah, I don't know about that one. The endorsement I'd given was for longer duration. So you might want to, if I were you, I would probably sell that and get a better duration. So I have more time. Okay. Tyler G, should I wait to buy my 400 GDX until I'm able to fund the corresponding options? Yeah, I would buy that with the option protection, and I'll show you why in a moment. M Hog says GLD expires in April, doesn't look strong, probably time to get out rather than after a drop. Okay, let's look at some charts. Well, first let's look at some tweets. Okay, Fed Bullard was predicting 30% unemployment, just looking at all the sectors of the economy that are not going to open back up anytime soon. So that's bad. That's Great Depression level unemployment. And our deficit's going to get also back to Great Depression level debt. which typically leads to wars, unfortunately. Okay, Munchin says this is going to provide relief for 8 to 12 weeks. So that's how long it's going to take for us to potentially lock down and reset the clock. But think about a workout. If you take 3 weeks off or 3 months off, you can't go back and do the same workout you did 2 or 3 months ago. And the economy won't be able to do that either. So I think we're going to see all economic data be very suppressed when we do open back up. So the best analogy is, think about a workout. If you could run a mile in 8 minutes and then you just sit on your butt for 3 months, you're going to go back out there and run a 12-minute mile and you're going to die trying to do it. So I think our economy is going to slowly get back to work and not have a sort of like a spring-loaded reaction where there's all this money. Because think about it, everybody's laid off, economic output's being destroyed, business models are getting wrecked. There's a few companies that benefit from this regime change. And again, that's your healthcare, biotech, medical device, e-commerce, and eventually, I believe, the military, which, if there's one thing you can count on is military spending goes up every year. And if you believe that this was a coordinated attack, as I do, then it's going to go up even more. So we like that ETF as part of our mix. This could be devastating. Amazon, Instacart workers plan strikes today. So the disease has been spreading in warehouses. Hazard pay. Everybody's going to want to get paid more to go take the risk. So that creates a lot of pressures and reduces profit margins, another negative for stocks. The long view, bear market bounces during the great financial crisis between September and December of 2008. The S&P 500 experienced 6 distinct 1 to 6 trading day bounces of 9% or more, with some rallies as large as 19%. However, the market bottom did not occur until March 2009. China unexpectedly cuts reverse repo rates to the lowest on record. Jim Bianco, he's been providing this timeline of what the media is going to tell you. And he's had it the same the whole time. He slowly checks off these as they come. Street rationalization completed, ignore it. So remember, first they're telling us this is stupid. I've got a funny chart. I think we'll see it in a moment, of all the media saying, oh, this is nothing to worry about. And then they ridicule you if you are out of the circle of mainstream thought. Temporary demand delayed, not destroyed. The US can decouple. And that's what this is really all about, is US-China decoupling, moving manufacturing back, China not wanting to do phase 2. If we go back to the trade war, that's what I believe this is all about. And President Xi had a speech in May insinuating that they would not bow down to any demands from the US. And they said, now the long march begins. We must rebuild everything all over again. And then all of a sudden we had a trade deal. What the heck? They're going to buy 200 billion in goods, not 50 billion. So it didn't make sense. And they knew about this virus spreading during the whole period of us signing that deal. So phase 2 would have been something like declawing the cat or clipping the bird's wings. They would have permanently been number 2. Phase 2 would not ever be passed by China. And again, their strategy is to act as one unit. So you got 1 billion people who are controlled that work for $3.50 an hour, and they pay a 70% tax rate. And then the government uses that money to provide services for the whole community, and more importantly, to laser focus all investment of all of China into key sectors that they want to dominate. So no single company in the world can compete with a $12 trillion economy, which China has. So that's what the big battle is about. Which model is better? And so China believes their model is superior, and that's why they don't want to take the phase 2 deal, and why I think they'll be happy to decouple from America, which has again been their big payday. But they've already stolen so much. They've stolen everything they need. They've planted the seed. Now they're ready to grow. So I think for them, it's a step back for a leap forward mentality is to decouple with the United States. Okay, so what's the street telling you? U.S. can decouple, U.S. resilient. Wait till we get cut off of all the supplies we rely on from China. Fiscal monetary stimulus, the Fed will fix this. Okay, we got that, $6 trillion. Okay, now working. Okay, so what are they telling us now? The bear market's over. We got all, Bill Ackman, BlackRock, the biggest equity manager says now's a great time to buy. I forgot to hear the sell alert from BlackRock. Anybody else catch that? I didn't hear it. Coming, we're doomed. Okay, so that's when we want to buy.
Great point, Jason.
Okay, Longview pointing out that gold shouldn't be correlated to stocks. Crypto shouldn't be correlated to stocks, but it sure as hell is. So we're going to have to reevaluate our gold strategy. We have QE early. That's the big positive for crypto and gold. Are we going to have a big crash in these assets? Maybe. So we'll take a look at charts. Everyone on Bloomberg TV thinks this is the buy of a lifetime right now. It's all over. They're so bullish they can even believe the Chinese don't lie. So again, he's been posting this over and over again. He's been on top of this since very early on. New York internet speeds have plunged. Okay, Eunice is a CNBC respondent, one of the few allowed to stay in China. Most of the journalists were kicked out of China. It was funny watching her go on TV and they would ask her questions that she obviously couldn't answer. And she would kind of shake her head and be like, no, guys, don't ask me that. At this point, if I were in the US, I would double down on social distancing. A US advantage is space. I would scale back shopping to essentials and have strict disinfectant protocol into the house. Yeah, it's going to have to be hardcore. What worked, China proved what worked. It's hardcore isolation for 60 days. And that's the life cycle for your body to be infected, create the antibodies, and now you're no longer contagious. So if we do that at a global scale, we'll essentially reset the clock back to December 1st when we first knew about this. It's almost like going back in time. We reemerge with masks. We can keep this contained. We can have reduced economic disruption, and then we can pray that we get a vaccine. Now, I do want to point out, we haven't made a vaccine for the two most related viruses. We're in the dark ages. So whoever does figure that out in the biospace is going to be absolutely rich, which is why we want to invest in the broad ETF, which has every biotech under the sun in one nice little easy package for you. Are they going to figure this out now? Are they going to figure this out in 5 years? Time will tell. The stimulus bill made me sick to my stomach. Not going to really cover that, but only 10% of the stimulus went to the people. And that money is going to be burnt in a split second as soon as it's issued. We're having this propaganda pushed on us that the government model of Russia and China is superior than the United States because they can deal with this so much more efficiently and spent so much less money to deal with it, which I think was the idea in the first place, that this would bankrupt America and give them an edge. When you realize you can't come to terms, then your best bet is to just try to set back the other and get ahead. And so we went through this trade war for 2 years. We did tariffs, they did tariffs, made no progress. And then all of a sudden we had a deal. And then, the deal was not what we thought. Pentagon orders essential staff to deep underground mountain bunkers. A lot of conspiracists are really upset that the stimulus is going to be in the form of a digital dollar, one which can be tracked, and that they're going to get rid of cash. Now, they haven't done that in the US, but in China, they sure did. So they came out with a digital currency, one which they can easily issue money to anyone they like. They could also freeze your money. They can track all your money. They can tax all your transactions. And they were saying that the virus is all over the hard money. So they started burning it. So a lot of people are very upset about that. Now they're starting to ban gun sales. They're talking about taking away weapons, taking away our rights to leave our house. So there's a lot of questions as to what on earth is really going down here. All sorts of contingency plans if the government gets sick. So I think that there's some pretty nasty things coming our way. Murray says, I have the 21 GDX puts. Should I sell them by the 23? Yeah, that's what I have, Murray. So I would say that I don't think that's a bad idea. Pat says, I have a question about the e-commerce ETF. He says, well, yeah, the online ETF has some good companies in there, mainly Amazon, Alibaba, but then you get into all these little niche e-commerce sites. So I like the ETF. Comes in a cheap price. I think about half of it's going to be Alibaba and Amazon. And then you get a broad exposure to a whole bunch of other e-commerce. So I like what's under the hood on that one. Plus the price tag's cheap. You're diversified. You don't have all your eggs in one basket, and you can easily sell puts to get into the position. So I prefer that product. Malik says he has a 417 put on 107. Yeah, I like the longer duration put, so I would change that to be the same puts we have just in general. Pat says, well, we have stagflation, inflation, or deflation. I think you're going to see maybe a mix of all three, depending on what exactly you're looking at. Food prices. What do you think, Pat? You think they're going to inflate or deflate?
I think we're in for stagflation. So you have to be tied to commodities, but I don't know. I mean, I'm reading a lot, and it seems like stagflation happened during the Great Depression, after the Great Depression.
Well, I think we're going to have food inflation. So we're seeing massive food inflation for the last couple of years in China. So yeah, if the cost of labor is going to go up, but yeah, you got a good point. Is anyone going to have any income? If we do what I believe is the only option, that's a 60-day lockdown, and then we come back out with masks, the damage to the economy is not so bad. So I think that's what we're going to do. I don't see any other way out of this. Now, if we don't do that, then you just have a slow crumble of everything. And then I could see stagflation coming in. So yeah, good question. I think different parts of the economy are going to have all three of those. I think we could find all three of those in different parts of the economy. So I'll put some more thought into that. Good question. Okay, some more tweets I retweeted. I'll never understand the stupidity of people who contended that masks are useless for slowing down the spread of the virus. In many ways, they're more idiotic than the people who completely minimize the risk. It's funny to see people on Facebook, just whatever the media says, they'll spread it out without thinking twice. It's clear that the masks work. That's why everyone in Asia is wearing them. And again, I didn't make up the solution here. China, they knew exactly what to do, didn't they? They knew exactly how to cope with this. They rolled it out, and it worked. And it was a massively controlled isolation. I mean, they were literally boarding up entire apartments where they thought that the virus was. And they all have masks. Okay, so from what I hear, 3M is mass producing these masks. We're gonna have to give them to everybody. It's gonna be weird to see the Americans change. It's almost as if they don't want to wear it because it's Asian or something, but they have no choice. Everyone's gonna be wearing a mask. Everybody's gonna be wearing something to protect your eyes. And that's that. There's no way around it. The longer that takes, the longer the stock crash goes for. But think about it, if we do this 60-day lockdown, get everybody masks, everybody wears eye protection, everybody's aware of the risks, we can get this economy back rolling, reset the clock, and then pump money into these critical industries that are going to get us out of the, really cure the problem, which will be the vaccination. So here's some propaganda out of China. China has brought the epidemic under control. The country has now become the supply base of medical resources for the global pandemic fight. The country is exploring a safe way to reopen the economy. These are all the values created by China. Keep racism away from the virus battle. Okay, Kyle Bass. Remember, the Chinese military school in Wuhan issued a lockdown notice on January 2nd. This lockdown was issued a full 18 days before the Chinese Communist Party admitted an epidemic. It's now clear that the CCP was busy buying up all N95 masks and gear globally. Okay, so they knew about this. The people trying to talk it down were thrown in jail. Russia, without any cases, locked their border instantly. Okay, FDA authorized new test that delivers lightning fast results. That's great, but doesn't stop anything. Really, you can test everybody you want. At the end of the day, it's an invisible disease that spreads without symptoms, and it's extremely contagious. So it doesn't matter if you have it or not. Everybody needs to isolate. 60 days is the life cycle. After 60 days, you're now created antibodies. Then we reemerge with masks. That's the solution that I believe will be rolled out in short order. And again, it doesn't work if just the United States does this. It only works if the entire globe does it. So what's China doing now? Now they're blocking everyone else from coming into China because they did exactly what I just said, and it worked. And so is every country that's having a slowdown in the pandemic. They've done exactly that. They've gone into hardcore lockdowns, and they're all wearing masks. Where in the Fed's charter does it say the Fed should or could buy ETFs? Market Watch says the Fed is going to buy ETFs. What does it mean? So yeah, I got to figure out how the hell they bought LQD. But they certainly aren't allowed to buy specific stocks yet. I think they will have to, unfortunately. The Bank of Russia's gold and foreign exchange reserves fell by 5% or almost 30 billion. So again, central banks want to own all the gold. They want to punish all the gold bugs. So they like to sell it hard whenever it starts to rally and then buy it back up as everybody runs. So understanding that, our plan will be to buy not short-term call options on GLD. I like the leaps. So I'll be looking at every time we do see a good sell-off in spot gold, we're going to come in with some leap options. So 2 years of time. And I think slowly but surely they're going to have to let the price go up in time as much as they want to suppress it. The president says that hydroxychloroquine is now being administered to 1,100 people, along with the Z-Pack in New York. So that's good. But again, unless you do a blind, it's really hard to know if this is helping or not because so many people resolve all on their own. So if you get a test with 6 people and all 6 people got out, well, they probably would have got out without any administration of this drug anyways. So, and furthermore, even if it does help, that doesn't stop people from getting sick and needing hospitalization So it might help a little bit, but it doesn't solve the problem that we might have tens of millions of people flooding the hospital system in the course of 12 months in the United States. And we have very, very little space for these people. He's critiquing the stimulus, which he believes will not stop people from getting laid off. So last week we had something like 3.5 million unemployment. And I think that's just going to keep growing rapidly. Okay, this is funny. Here's the Miami Beach where we saw all the people gathering and partying. And here's where they came back after the break all over the country. So there you go. There's a nice little push of contagion spreading through because of reckless kids. Okay, this is how much the Germans hate debt. Remember, they blew out their currencies between World War I and World War II. And this was from all the Europeans wanting reparations from World War I. They couldn't afford it, but everybody had so much pain, so much death, so much debt that they were all about making those Germans pay back their misdeeds. And it pushed us into the Great Depression, caused their currency to go into hyperinflation mode. So Germans still hate to increase debt, but now they're finally starting to budge and create some more debt. Now, are we going to punish China for what they've done and put the world into a Great Depression? Probably. Unfortunately, I think that's what's going to happen. JFK Center stops paying musicians after getting a $25 million bailout. So all the different companies that got bailouts in the stimulus plan were absolutely absurd. Trump says extending the guidelines to April 30th. So again, I was saying by Easter, he'd be on his knees. But yeah, this is nowhere. We're just, you can see he's slowly babysitting the psychology of your average American to realize things are changing and they're not going to be the same. So I think he has to just slowly do that. Otherwise people would flip out. This guy was on Sunday spying on some bodies being thrown in this ice truck in New York. John Bolton has had some funny tweets lately. He's ready to go after China right now. Yet another round of missile tests by North Korea, 4 launches this month alone. All the world races to fight a pandemic, a troubling escalation, and a glaring example of how little North Korea cares for its people. This, I believe, is in Hong Kong. So one of those bonus trains.
呢度有警員啊！呢度呢個係交通警啊！佢掹槍啊！佢掹槍！喂喂喂喂喂！
Yeah. So all is not right in Hong Kong for boot campers. I'm starting to consider the Hong Kong trade. So I'll cover that more on Tuesday with timing on that. Dr. Fossey, we're going to have millions of cases and between 100 to 200,000 deaths. I think that's still lowballing it, unfortunately. More like we're going to have tens of millions of cases and a couple million deaths, unfortunately, is more realistic based on the numbers we have. It's just a matter of how fast do you want this to occur, not based on all the data we have number-wise. Now, this is in China. So they've let people out of their houses into their communities, but they still have all the highways blocked. And the Chinese are getting pissed. They want to go back to work. They're all starving. So there's riots. And now what the Chinese are doing is they're getting thousands of people in a crowd. They're using a VPN and they're all producing the same video and uploading it at once. And it looks like they're actually able to to get content out, because they can't block it that fast. I'm guessing, because there's some clips coming out of China again. And so, yeah, there's still 60 days later, still severe limitation of mobility in China. And we're starting, it's everything that played out in China is playing out to the T here in America. And so I was watching this happen with disbelief day by day in China, then saw the same thing roll out in South Korea, same thing roll out in each country. Now, Italy was the next big one, but it's slowly working its way throughout America. Connor has a question. People are still massing in grocery stores and farmer markets. However, one solution seems an antibiotic therapy. So Connor, it'd be really nice if we all already had it, and most people are fine. But I would guess we have pretty solid data that if, at least if you're over 80, that you have a pretty high chance of dying. So that's really the hard part to cover up, is the deaths. They can block testing quite well, but what they are doing is when someone dies, they're testing, and that number is showing up right here. And so just some basic math. Until this is in globally, as soon as this is in the tens of millions, then and only then we've probably gotten most of the population infected, and probably be near a bottom in terms of people having this fear of working. So I'm afraid to say it's quite likely going to be, several more zeros added to this number before we're anywhere near having infected most of the population. So I would anticipate that less than 1 in 1,000 in the globe so far has had it. So we're really just, the percentage completed of the spread of this is less than, it's 0.1%. So the real damage to the economy is just getting started, unfortunately. And I just don't see any way, unless somebody had a vaccine created before this was put out and it's hiding and they're going to release it and someone's going to get rich and it's some kind of crazy dark conspiracy. There's really no way around this. It doesn't look like heat is going to have any impact. There's enough data. This has just been growing exponentially day by day and spreading into countries that are less censored, that almost without doubt, this is going to work its way through the population. Now we can slow it down. We can reset the clock. We can do a lot of things. The 60-day lockdown is really the smartest move for humanity right now. Okay, here's that graphic of the media. Is the CV worse than the flu? Here's how the two compare. Just tons of headlines. Just what a joke. Forget the CV. The flu of 1918 did more than this time. Want to protect yourself from the CV? Do the same things you do every winter. Yeah, right. Flu is deadlier, more widespread. Action 7 News. The National Post. The new CV may be no more dangerous than the flu, despite worldwide alarm. Yeah, a bunch of BS. Four passengers die aboard the Carnival cruise ship stranded near Panama. Okay, we have a question. Gloria Huffman, there are many reports from China that death toll is much higher than reported. With all due respect, can you put any credence on the official reports of the? Yeah, I think they lost millions of people. So I trust what China does, not what they say. Okay, so they've never shut down China for any reason under the sun. In fact, You know, it's more like a slave labor state with severe censorship. So the last thing these guys want to do is stop printing about 1 trillion. You know, imagine you control 1 billion people. You've got artificial intelligence cameras scanning everybody everywhere. You've got tens of millions of people sitting there reading every text message, every chat box, every picture. And if they say anything you don't like, not only are you going to mute them, you're going to go throw their ass in jail. Then we're going to pay them $3.50 an hour and tax them at 70%. So the people who control China, they've got it made. They don't want to lose $1 trillion a month. So why would they shut down the economy? It must have been really bad, extremely bad. Otherwise, they wouldn't have done it. So yeah, more people accidentally die in America from using a power drill with their uncoordinated hand than how many they've reported died in China. So it's absolutely garbage. Pat says, what happens if Saudi Arabia reverses the flooding the market with oil? I hear there are talks between US and Saudi. Well, it's really Russia that's trying to crash the oil market. And I think they're going to continue to do so. I believe they're trying to crash the value of the dollar is the end game here. Okay, nursing homes are just, that's your canary in the coal mine. If you live near a nursing home, if people there start to get infected, then that's your heads up that the angel of death is prevalent in your exact area. So that's really sad, but these are the most at risk by far. And they're all trapped in a small area and taken care of by people who tend to have kids. So that's just a really awful business model to be in if you're an owner of a nursing home right now. I mean, what are you going to do? You should be making everyone wear a mask, but there aren't even masks available. It's just a really sad situation for nursing homes. China just shut down movie theaters nationwide after reopening them. Sounds to you like the pandemic's under control. Me neither. China's still lying. Tyler G says he just watched Module 2, How to Short the Chinese Currency. Well, so that's if we thought America had the upper hand, which I thought that we did. This was a beautiful attack. This was a huge blow to America. So I think the short term is that America lost the battle. I don't know if they'll lose the war, but this was a very beautiful attack. How else could a China dealt such a strong blow to the United States? It's going to go down in history. We'll see how we come out from underneath. I like the Hong Kong trade now more than the shorting the Chinese currency, because what's easy retaliation America can do? First thing they'll do is block all investments to Russia, China, on top of what we already have against Iran. And we could take away Hong Kong's special status, which could cause their currency to be revalued to the yuan, which would be a really beautiful play for us if we're short the Hong Kong dollar. We could outlaw all of our retirements and pension funds and Bloomberg and all these corrupt people stateside from investing in Chinese products. I can see that coming down the pipeline. I did not anticipate China and Russia coordinating such a strong attack right after they supposedly were coming into this period of peace with the trade deal. So Tony Cologne says, which ETF bundles the healthcare stocks? And that is XLV. I'll pull that up. So the weighting I have in mind currently will be 35 allocation and a 35 allocation into healthcare and e-commerce. And that's because their revenues and profits are just literally tenfold compared to the other industries. And then a 10% position into biotech, medical devices, and aero defense. We'll look at some charts in a minute. Oscar, how's it going? Oscar's on the front line himself.
Oh boy, Jason, I wish I could answer that in a more optimistic tone, but what you have been talking about has been like a playbook. Right now, we had a strategic meeting, and basically, we see no end in sight. I mean, May 15th is probably the most optimistic peak I've heard of regarding what we're seeing. I mean, the governor basically is attempting to shut down folks from New York to come down here. So when you look at the numbers, it's just scary. It really is.
And for everybody who's not familiar with Oscar, he's administrator for many of the hospitals in Florida. So I've been sitting here saying what I thought was going to happen. He says it makes sense, Jason, but so far we're not getting the rush, and now they are. And you guys are building the tents and all that jazz too, right?
Well, no, we're not there yet.
Not
We're
quite
not
there.
there yet, and strictly from a perspective that that will cause more panic than need be right now. However, I will put an asterisk by that. I will qualify that statement saying that could happen at any time if we get inundated. And that's what we're seeing. We're seeing waves. And it's concerning from many perspectives because we get overwhelmed. But we're sending a lot of people home. They're better off being at home than being here.
Yeah.
And
what's the average cost of a treatment running? 35, 50 grand?
Probably. Yeah. Given the length of stay and everything. Yeah.
Oh man.
It's up there. And at this point in time, we're making a concerted effort to clear beds for what we feel is an inevitable wave of patients coming in.
Oh.
The quarantine is being taken somewhat seriously. And I say that because I was stopped by a police officer yesterday. My town where I live in, we're isolated and been given orders. So I had to show him my credentials before he let me go. And that's a good thing. I see that as a good thing.
Yeah, that is good.
But we'll see how long that lasts. I mean, the youth, I hate to put it on them or pin it on them, but they are taking their very cavalier attitude that this doesn't really affect me when they don't really come to realize how much it affects people. The older.
Oh man.
So I'll keep you posted, but that's the report for the weekend.
Yeah.
By the way, the number of patients have doubled since I last talked to you.
Wow. Okay, well, thank you for the update, Oscar.
Now the testing is going to be key.
Are you guys able to test as desired now, or are you guys still pulling off the X-rays to try to makeshift it?
The problem is that now we are able to run tests, but they're 4 to 5 days before you really find out. And that's way too much of a delay, frankly.
Yeah. Think of the bill they rack up just waiting for the results.
Yep. That's
Oscar,
exactly it.
are you able to make a clinical diagnosis before that?
I'm sorry? I didn't.
Are you able to make a clinical diagnosis before the actual test results come
there's
back?
There's a criteria that we focus on, and the likelihood of that being a COVID patient is pretty high. I mean, we're thrilled when their test comes back negative. That just tells us they've got symptoms of an underlying flu or something. But a lot of these patients are already suffering from some of the comorbidities that come along with this kind of stuff. So we just don't want to take for granted that what we're seeing.
Well, here's how the isolation is playing out in, let's see, Kenya. It's going over very well in Kenya, huh?
Looks like South Beach on a busy night.
India had similar clips.
Guys, I got to run, but thanks for all you do, Jason.
Oh, thanks, Oscar. We'll talk to you.
We'll talk soon. God bless.
God bless. Okay, Russia to close all borders. They did that a long time ago. 25-year-old California man with no underlying condition dies of the CV. I think I had a 1-year-old baby or a 3-month-old baby that passed away from it. New York, pre-virus death rate was 1 per 9 minutes. Now it's doubled because of the CV, and they're just getting started. Here's South Africa. Oh. Okay, let's look at some charts. Okay, so in this first chart, we are comparing the SPY to the TLT. And for the last 2 months, I was predicting these would cross, which they did. We had a bunch of people cover their short puts, and a couple $1 trillion pumped into the financial system. Got a little bounce here on stock, a big bounce here on stocks. But it didn't budge the treasury market. So treasury market keeps marching higher. And I believe this is going to run out of gas soon, and the real descent begins. Here's just a SPY on its own. So we have puts that are looking at this level right here as a resistance, the 220, the 200, the 180. And we work our way lower and lower with more and more time premium. So I'll be slowly letting go of those puts and then trying to find the best time to replace the cash. Again, that's the walls of our house. We're going to replace those with the ETFs of the few companies that should benefit from this paradigm shift into how our economy is going to function. So we put this on at 240 right here. And then it went to crash all the way to 229. And then it bounced magnificently back up and still going up. So again, I'll be happy to increase the position size on Friday, most likely at the earliest, but not sooner. Here's the TLT. And so we were long and watched this pop all the way up to here. And then you had margin calls worldwide, central banks, big hedge funds, people short who were long oil with short puts just got clobbered. And so we saw this huge sell-off. We held strong. We didn't budge, not for a split second. We didn't blink. And now the bond market's rallying right back. This is really your giveaway. This is where all the big money is going to be forced into because we have to fund the government to paper up and absorb all the losses the economy is having. Here's the dollar index. A strong dollar is bad for emerging markets and really signals trouble ahead. And so we saw this get as high as 103, which was just insane. And they've gone and printed in one way or another approximately 6 trillion in stimulus. At least 2 trillion is yet to be printed because we have to issue the treasuries. But they have put 4 trillion into different lines of credit that banks and broker dealers and different institutions have access to. And so it did weaken it a little bit, but what's it doing? It's bouncing right back up. So I'm afraid the strong dollar will remain as the stock market continues to crash here. Here's the, I'm going to reduce out everything but Germany. Okay, I'll have to fix this chart for us for next meeting. In this chart, we're going to compare the German 30-year yield against the US 30-year. And the bottom line is that German 30-year bond was able to go into negative territory last year. And I anticipate if it goes back into deep negative territory, that the yield on our 30-year can go much lower than most investors are anticipating. So I think we'll blow through 1% and end up closer to 0% by the time all the dust is settled in this. Okay, next set of charts we're looking at is comparing emerging markets, which is the candlestick. We have FXI, that's the Chinese specific ETF. You can see it's outperforming emerging markets. And again, they were able to stop the disease quickly with very extreme lockdowns. Now, we haven't really seen the impact of this to their economy, and they've outlawed selling stocks, and they're doing all sorts of shenanigans that I believe will be temporary. Big picture, I believe investments into China are going to be outlawed by the United States. So I love being short their market through puts. If they do get just completely wiped off, then you get the strike. So if we had, say, a $30 strike on FXI and it went to 0 and we only had to pay $1 for it, then we lose the dollar, but we get $30, the maximum payout. So potentially we'll look at adding a FXI specific put option on either Thursday or Tuesday this week, probably Thursday though. So that's one trade I have in mind for our pro members coming up. And you can see it's odd that China, where this all started, is outperforming the SPY. It's outperforming South Korea, and it's outperforming the more broad ETF EEM. In this, we have gold. So we have GLD in the candlestick. We have the SPY in purple. So we can see that we're getting a positive outcome in GLD while we're seeing the SPY sell off. We're seeing silver sell off, spot silver, and we're seeing gold miners sell off. So that's one reason why I do want to hold on to our GLD call options. And instead of going for those short-term options, we'll be looking at leaps. So that'll probably be a trade in the near future for our pro members. And as Jeffrey Gunlack pointed out, he loves gold. He thinks gold's going to get to new highs because of all the money printing. He sold his GDX position right before it popped up massively, but he did that earlier. And he's just playing spot gold now. He says, even though gold miners have a great business model, they still live in the world of stocks. So if we get a big stock crash, there could be selling of anything correlated to stocks. And right now, GDX is certainly correlated to stocks. So there could be just some systematic selling without any fundamental analysis. And that remains our biggest risk for gold, precious metals in general, but it is interesting to see that spot is doing better than stocks as well as spot silver and gold miners currently. Paul says, how many cases in New Mexico? 237. So get this, in New Mexico, in our area, there's 700,000 people. So you divide that by 237, that's 1 in 3,000 have been diagnosed with it so far, which is pretty scary because we're way out in the middle of nowhere. And then if you assume that that's 5 days old and that it's growing at it's doubling every 3 days. So we're probably at 1 in 1,000 here in Albuquerque, which is scary. I was thinking that it would be more like 1 in 10,000 currently. So it makes you wonder what the real concentration is in somewhere like New York right now. Probably maybe 1 in 100. And then if you realize the mortality from that will play out in a period of 30 to 45 days. So the next 30 to 45 days, even though we're slowly starting to lock down, they're going to be pretty vicious on the hospital system. Even if we went in an extreme lockdown today, just this rough estimate of maybe 1 in 1,000 Americans have been infected. That's a huge chunk of people coming through the pipeline. Let me just quickly calculate that. So if we have 350 million people, and we divide that by 1,000, we have 350,000 infected. So that's 35 to 70,000 people just from where we're at right now who are going to be spreading it and also hitting the hospital system. So if you realize there's only 10,000 ICUs before all this mess began that were open, just with what we have right now, we're going to completely flood the hospital system. So that's not good news. And we're still not in a very serious lockdown yet.
Yeah, and Jason, just love how you have the ICU numbers, laid out weeks ago, right? And months ago, actually, I should say. It's just been phenomenal how far ahead of this entire situation you've been. Great job, bud.
Well, thank you. I've been hoping I'd be wrong every morning. Okay, in this chart, we got the dollar against a few currencies. So if you want to plan a vacation, your currency against the Aussie dollar is like double. And so probably airlines are more clean than, they haven't cleaned those damn airlines in a decade now. They're probably super clean. So get your face mask, get your gloves. You can carefully go take your vacation if you're daredevil. The contrarian, right? So a few months ago, it was dangerous to fly. Now everybody's scared. Probably one of the safer places. Which currencies are holding up? The Japanese yen, safe haven currency. So far, everything else is primarily weakening against the dollar. And that's with us printing money at a faster pace than ever before in history. This is what really caused the damage to start off, was this change of price of oil. You can see it went from 50, where everybody's super confident. People are selling puts or futures against oil, making a ton of money. Everybody thought we're going to have a great year, good growth, positive geopolitical relationship with China. And then boom, Russia just dumps the market and continues to dump the market. And now they're running out of places to store the oil. And this is what I think caused our TLT to pop, is people had to sell their treasuries to cover massive. People could have been down thousands of % versus their total account with this drop if you had been selling naked puts in one way, shape, or form against the oil market. And then think about all the banks that were loaning money to all the small oil frackers, and their business models are done. And then we have USO and UNG, so those are American companies. Let's go to, so these guys are trading at a discount. I think the pain is just starting, and I can't wait to add some of those to our pro portfolio when the time comes. And they should be trading even cheaper than they are currently. Okay, so crypto, we're not officially trading in our portfolio just because it seems like a lot of people aren't really set up for that. It does make sense, but they're super correlated to stocks. So if you're trying to bet big on crypto, we got the QE. We got the QE. That's good. We got low rates. That's good. The correlation to the stock market's bad, really bad. So I'm actually personally going to have a bunch of limit orders sitting at very low prices on this asset in hopes that we can get a pretty significant crash to gobble up these guys at cheap. So I'll cover what I'm doing for anybody in our boot camp, but I won't be covering this in the pro. I've personally made a ton of money in crypto. It's definitely a risky asset that doesn't deserve a very large risk in our clientele's portfolios. But it's definitely a good asset to be aware of and highly correlated with gold and silver in the long run. Okay, now we have those ETFs. These are the ones we're interested in getting into. So the candlestick green red is SPY. Let's zoom in here. So the only asset underperforming the SPY right now is probably because of Boeing and ITA. So you can see that this one, I believe, will be probably the biggest value play for us when the time comes. But we can see these companies are all highly benefiting from this environment. So specifically e-commerce and XLV, you think would be doing a little better. So that's in yellow and red. So they're just barely keeping up a little bit better than the S&P 500. The one that's really outperforming the S&P 500 before the crash and during the crash and after the crash is medical devices, IHI. And that's because we have like 10,000, I don't know, we have like 30,000 ventilators and we need more like 1 million. So those companies are pumping those out as fast as they can. So this is the group of stocks, but you can see if we bought them now and the general S&P 500 tanks, then we're going to have some big losses. So even though I like these industries, I want to wait till we really see a panic. I think the real panic's nowhere near here. So again, those are our 5 ETFs that will create the walls of the house we're going to build. Here's another copper to gold. So they call it Dr. Copper. Copper is used to build stuff. When times are good, copper's prices are going up. And people use this ratio to predict treasury moves in the bond market very accurately. And we can see the gold copper ratio is falling off a cliff, indicating that bond yields are headed lower, that growth is dying. And so that is very good for our position to be, again, long the bond market, which I think is going to be the single best returning asset for the next 2 years, at least when you consider in volatility. So least volatility, best return. That's really what we strive for in our portfolio. All right, that's a good wrap. Let's go into Q&A now. Jim Wills has a question about the buy and hold. Yeah, the buy and hold is set to jet, so the instructions are correct. But again, if you're following different program, then you don't need the buy and hold. That's just for people who are only doing the buy and hold. I would prefer everyone obviously be in the pro membership with the bootcamp trades. And you can see has the best return this year because it uses the option market to every advantage.
Yeah, and just important to understand too, guys, we will make the changes to buy and hold on Mondays. Okay, but you can always look at Jason's screen when we're in, or look at the email in reference to which level of membership that's on. So if you're on basic or pro, you won't care what the buy and hold's doing unless you're maybe using that with a different account like Kathy Crickman does. That's a smaller account.
I'll be right back in 2 minutes. Dan, you want to cover all the offers we have real quick? I'll be right back. Great.
Sure. Okay, cool. Let's see. Hey, Jason, do you want to move that chat? There you go, down. Okay, cool. Thank you. Yeah, guys. So if, and just kind of to go over this real quick. So if you do upgrade to Pro, okay, which is the third option on your screen, you will get all the portfolios below it. Okay, if you upgrade to basic, you'll get basic and buy and hold, right? If you do pro, you get all three. But yeah, guys, make sure to look at the trade alerts, read the trade alerts, okay, and you will see the differentiation from what the pro membership is doing from the basic membership from buy and hold. Okay. And predominantly, guys, buy and hold is used by people with $30,000 or less. Okay, or there is some people that are actually, doing this. So what they'll do is they'll actually have pro with their large account, but maybe they have another cash account laying around that has 25,000 in it. They'll actually follow the buy and hold with the smaller account, follow the pro with their much larger account. Okay, and Kathy Crickman has been doing that and has done a phenomenal job avoiding the crash here and creating some profits. So let's see. And yeah, guys, buy and hold's real simple. I mean, it only made 5 changes last year. Okay, and made some more changes this year. Obviously, a lot of volatility, but that's going to be the least amount of work. It's the lowest cost, and you can follow it with $30,000 or less. Okay. Now, if you're on a trial and you have between $30,000 and $75,000, a lot of those clients have really liked the basic portfolio. Okay, and it is currently predominantly trading options. Okay, and can't wait to make just some ridiculous returns, guys, on this portfolio once the market takes its next leg down. Okay, and then in that portfolio, we'll teach you when to go back into the S&P 500, but now is certainly not the time. Okay, now the next level down here is the option 3, which is the pro portfolio. This is what virtually every single person I've talked to, I think it's 99% at this point, of our customers are using if they have an account over 75,000. Okay, and we have accounts right at 75. Some people will go in and test with 75 or 150,000. Okay, they'll see how it works. They'll see the consistency, and then the next thing we know, they're scaling up to 300,000, 450. In a lot of cases, well over 7 figures. Okay, so people following this program really are kind of minimum of 75,000 up to in excess of 4 million. Okay, and just really, really nice program. It's going to be the most comprehensive out of everything. And the neatest thing, guys, about the pro portfolio too, is it does have its own exclusive webinar on Thursdays and really kind of dive a little bit deeper into the markets and just really having a good time with that. And thankfully, I've been able to produce pretty insane profits following that portfolio with my capital. Okay, and I got to say, without Jason's help, I probably would have lost a lot of money in the market, and have avoided that, and have been able to profit thus far this year, instead of having the 20 to 30% drawdown, or if not more, like most of you investors have. So And last but not least is the boot camp. Okay. Now we do still have the lifetime boot camp option on our option page here. That the lifetime optionality will go away eventually, and kind of is really due to number of seats in the boot camp. But one of the cool things there is you will get access for now for lifetime membership to boot camp. Okay, and you get a year of the pro portfolio at no cost. So pretty cool. And one of the things, guys, we will have that will go away is lifetime optionality period. That was, something we're doing so we can increase our advertising budget as a business. Okay. But eventually that won't be an option for our client base, and it'll only be annual options at that point. Hey, Joe, how's it going? I see your microphone's unmuted, bud. Do you have a question?
I kind of did. Jason had referred to the 5 ETFs that he was kind of brewing on. And
Yeah.
I got IHI, XLV, the SPY, and I'm assuming FXI was one of them because he had a kind of a lengthy conversation about that one. And then we parked at the GLD GDX for a little while. Is that the 5, or did I miss something there?
FXI, we want to short. I think China might be outlawed.
Okay. Yeah, Chinese investment vehicles, basically.
These are the ETFs I believe will benefit from the debt the government's going to sell, which is so far $2 trillion, but I think it's going to actually be more than that.
Okay, yeah. So you had mentioned that Thursday in the pro for the pro folks that you were going to talk about this more. So I'll log in for that and catch you at that point for the FXI. So what was the other? I got the 3: SPY, XLV, IHI, but I'm obviously missing 2. Am I looking at them on your screen? IBB.
Yeah, but we don't want them now. I think these are going to get crushed with the general market, and then we're going to buy it.
Okay.
So the analogy is we're trying to build a house, right? So the put options are the floor. That's your concrete. We need a stable foundation. So those put options act as the foundation. The walls of your house currently are cash, but we're going to convert the cash into a nice strong brick wall, or whatever you want to call it. It's going to be these 5 ETFs.
Mm-hmm.
I think that's going to be in 6 months.
The frame, okay. Jason? Joe's a fellow home builder.
Oh, good. Excellent. So you'll like that. And then the TLT is your roof. And FXI, I'll put some put options on probably Thursday.
Okay.
Because I think that one could go to 0.
All right. I had this might be somewhat off subject, but I know that you don't actually recommend that anybody do spreads, and that may just be at this moment. I'm not sure if it's just for this moment or forever. But I already had a couple of spread options, and I cashed them out today for about an $8,000-9,000 profit on a couple of TLT spreads. I caught one of your webinars before I became a member and went, "Wow, that guy sounds smart." And I went and did some homework, and I went, "Okay, he is smart." And I like spreads, so I bought a couple of spreads, and today is payday for me. So.
Way to go, Joe. Good job. No, I don't mind. There's plenty of people who take so my goal is to make the program as easy to follow and as simple to follow as possible with the least strokes. So I want to paint the picture with as few colors as possible and as few strokes as necessary. And because of that, we're finding that everybody gets very close to the same results with almost no confusion. Now that doesn't mean you can't take what I'm putting out there and enhance it. So plenty of people are taking the information and they're enhancing it and they're taking it to the next level. So I don't discourage that, but it's not required. So
right.
Good for you.
Yeah, I get, I get what you're saying, the keep it simple, stupid kind of rule. And, from my background tells me that that's absolutely the very best way to accomplish whatever it is that that you're working on. Keep it simple. Lots of people can do it. You'll get your job done. And I like this approach. And then, of course, we always have the option to do a little something different on the side. That's the great thing about America, the land of opportunity.
Yeah, you got it.
All right.
Excellent, Joe. And great question, bud. Joe, how much capital do you have behind us now? I think you're going to start with, was it 150 or was it 300? I can't remember off the top of my head.
I split. I did 225 to start.
Okay.
And I had about 80,000, 70 or 80,000 in other kinds of options, spreads and things that were in play already. Most of those have played out. Most of those will go to zero. My payday today will actually just cover my losses for the few that will go to zero. And so all of that worked out okay. And so I'm working with 225 through following you guys. And really, I haven't done much other than that at this point.
Okay.
I got some other fixed asset things, some bond coupons and things that go out to like 2025 and 2027 and, like way out there. And
sure.
So I didn't do anything to those because, those are going to be okay. And I have a couple of LEAP projects, a Coke one, and the standard ones, the top five, the dogs of the Dow kind of thing. I got a couple of those, and I kept them and they're doing well now. So at any point, I can dump those when they do okay.
Sure. Okay,
so,
cool.
So I think I'm okay at this point.
Nice. Okay, awesome, Joe. Well, look forward to see, where you're 6 months down the road, 2 years down the road, and see what you end up building up with us. Okay, let's see. Tom Sharp, you have your question, your hand raised, and your microphone is unmuted. But how can we help you, Tom?
Early this morning, I saw a YouTube episode from POMP, P-O-M-P, episode 248. And I found it very interesting. Talking to a guy who has a lot of background in crypto coins. And they were talking also about UBI, what is it? Universal basic income.
Right.
Basic income and several other things that I hope that maybe Jason can discuss maybe at the next boot camp thing. But
sure, email me a link.
I found it to be very, very interesting.
Nice, Tom. Yeah, if you want to shoot Jason a link and we'll talk.
Well, I've already done that. I emailed him this morning already, but I thought
cool.
I maybe more of our group could also take a look at it so they have some basic information on it so that maybe it might be more either beneficial or they can write it off faster.
Sure. Yeah, if you want to get deep into the whole conspiracy, what's going on, James Rickards has a pretty good piece. But this is what concerns me about, oh wait, let me get to the chart. This is what concerns me about being long crypto right now.
Well, there was a whole lot more, not only crypto, but there was a whole lot more that they were saying of some things that you agree with too.
Okay, cool. I'll check it out.
It was an hour and 24 minutes, and I was just spellbound by it. But maybe I'm goofy. But there was I saw an awful lot of agreement with what you are talking about too.
Cool. I'll check it out. But yeah, this is what's got to make all crypto investors a little scared. Is there's a extreme correlation between stock market returns and Bitcoin, even though they have nothing to do with one another. So I'm actually hoping to pick up these on a huge sell-off for personal, for my personal portfolio. But yeah, the big conspiracy is that there's going to be a world government created to deal with this crisis, and that they're going to create a world currency that they can deliver to everyone, and the end of the dollar dominance, which they call the SDR. So James Rickards has some good info on that.
Nice, very nice. And thank you, Tom, for that contribution. Truly appreciate it. Okay, guys, anyone else have any questions? Anyone on trial that has any questions about what we're doing, why we're doing it, anything in between? And Jim Will said, gotcha, thanks. Okay, Jim, hope that made sense for you, bud. Great. Okay.
I have a question. I had to step away, so I didn't get to hear the answer to my chat question. Hello?
Yeah, go for it.
I wanted to know if you would still recommend for a new 75K buying the 5 SPY puts, buying the 200 shares of TLT and the 400 shares of GDX and the TLT puts and calls.
Yes, sir.
Okay. All right. That's all I needed.
Okay, nice. So you add in another 75 today, William?
It's on its way.
Nice. Okay, great. Beautiful. And good question.
I'll have a total of 365 and 75. So about 420 or 430, I guess.
Nice, William. Very nice. William has scaled up quickly. Awesome, William. Love to hear it, bud.
All right.
Okay, great. Let's see here. Jack says, can I talk to anyone that can review my position? I want to follow to the 10th on the pro.
So yeah, Jack, all that happens on webinars. We cannot consult you one-on-one over the phone, okay? That would be illegal and we could get in trouble. So if you want me to look at anything, it has to be in the webinar format.
Yep. So right now is a beautiful time, Jack.
Okay, so can I review it now or what? What should I do? I'm just trying to, can I just, because I'm totally confused with your spreadsheet, how to enter my position there. So I have my own spreadsheet. So can I just email to you and see where I'm missing?
Sure. Yes, email it over. I'll pull it up.
Thank you. I know that you don't want to see the trade that I made myself. So I want to just transfer all this where I'm at in my position on your trade, basically. So I'm going to just go ahead and I guess how do we do this? Okay. Okay, I'm going to save this and I'll email it to you right now.
Oh, Pompeo. Yeah, I know that fellow, Tom. He's a perma Bitcoin guy. But I'll definitely check that out if I get time.
Jack, I got to tell you too, but I'm proud of you. You went from ultra speculative to really defensive in your investment strategies here in about 6 months. I'm proud of you, Jack.
I need Jason to protect me, man. I'm so compulsive. I'm a gambler, and I don't want to be a gambler at this point.
Yeah, it's not the time to take big risk unless it's
so
on
that's why
the downside.
that's why I need help here. That's why I joined the pro, because I need Jason expertise.
Yep.
What's the email address that I need to send this to?
Support@portfoliobuilder.io.
Okay. Okay.
Okay, guys, and real quick, while we're getting that up, I'm just going to post a link in here. If you're on a trial and you haven't booked a call with me at this point, please feel free to do so, guys. I'm going to go ahead and post that into the chat at this point. I know we have quite a few new people in here. So just click on that link. If you are on a trial, go ahead and set up a time to chat, and we can review any additional questions you may have. Okay. And just real quick, I'm going to post our client reviews in there as well. Okay, just so you all have a couple of these links. And if you're on trial, go ahead and copy and paste these into your computer. And that way you have all of the access here that I'm going to send over to you guys. And also the options to go ahead and get started. And it's pretty cool, guys. When you do get started, we do give you that bootcamp content to review. So, you know, in addition to having the trades that you can put on, obviously now, you can learn how the financial system works in video number 1, learn about the 92-year history of the stock market, how and why it works. Okay. And can't tell you guys how many times I've been over video number 1. It just really kind of helps put things into context and into clarity in a huge way. So the 3 links are in there for you there. So you can, the first link will let you book a coaching call. The second one will show you our testimonial page. The third one will be the option to pick out whichever service works best for your capital base. Okay.
Okay, Jack. So you're mixing some of our buy and hold strategy with the pro. I think since it seems like you're having kind of a little difficulty following, I would just follow the pro. So the pro doesn't need the yang or the FAZ because we have put options.
So what should I do now? Since I have that, should I dump it, or what do I do?
Yeah, I would just follow. I would try to make your life easy and just follow the pro.
Okay.
So I probably wouldn't have these.
So I just got lost then on the yang and with everything else, because I'm in that.
Okay, so here's what you're gonna have to go back to, Jack.
Yeah.
Okay, so per 75,000, you should have all these. So you're trading 210, right?
Yeah, at this moment, yeah, I guess, yes.
Okay, so you should have 3, 3, 3, 3, 9. This is what I would do, not what I'm telling you you should do, but. $600 TLT. So let's just summarize it. So with 200K, you would have 600 TLT. Six of those. 3 of these. Three. Okay. I wouldn't even worry about the gold or anything else. I would, because this has been kind of repetitive problem. I think this is where we need to get to before we worry about the gold position. But I mean, we could summarize the gold position, and I guess that's about all there is to say. Okay, so that's how I would personally have my portfolio. So if you don't have exactly that, you're not following the program.
Okay, can we get that sent out in a post?
Does that make sense?
Yeah, can you please mail it to me, Jason? Thank you.
Jack?
Can you mail that for me?
Test 1, 2. Oh, I still got audio. Yeah.
Yeah.
Are you there, Jack?
Yeah. Yeah. Thank you. Okay.
Joe, you got a question?
I do. This is basically
Shoot, I lost my audio. Hold on, guys.
money that I'm using as well, and I'd love to get a copy of this because watching you put that in, I don't have all those positions. I'm missing at least 1 or 2 of those, so I'd love to get a copy of that.
Okay, you know what, guys? I just screencasted that. I'm gonna post it to you guys right now. Okay.
Perfect.
Yep. And if you guys have screencast technology, if you don't have it, I use it a lot because we do cover so much information during these presentations. But yeah, I'll certainly paste this to you guys here. But it's nice to just screencast things from time to time.
Let me see if I get my speakers to work here.
I can hear you good, Jason. Okay, so Joe, it is in the chat box for you. And Jack, I have yours coming right now too, bud.
Okay, so I don't know what the screen chat is.
Oh,
but
screencast.
I saw the address.
Don't worry about the screencast. You can just go to the chat and click the link.
Okay, gotcha.
Yep, exactly. So let's see here. And then where did Jack go? There's Jack. Okay,
Hey,
cool.
Tess, can I get an audio check from somebody?
Check.
Check. Sounds good, Jason.
I think he muted his headset.
Yeah, Jason, we can hear you when you're testing,
Still
bud.
don't have audio. Sorry, guys. 1 second.
Okay, cool. But yeah,
Okay,
Jack,
try now.
Yeah, you're good, Jason. It sounded good the whole time, bud.
No.
So
Okay, sorry. I'm getting a little charge in my headset. It went dead after the 2.5 hours. Sorry, guys. 1 second. But yeah, Jack, I would just follow one system. You kind of have some stuff from the buy and hold, which is
so should I just dump it?
probably not the best bet for you.
Should I just dump it then? The TAC, the TAC and the Yang and the whatever it is, the FAZ.
John, hurry up so I can get rid of my.
So since I already bought that, I'm in a lost position there.
Okay, let's see. I should have audio back now, hopefully.
Yep, sounds good, Jason. Yeah, we could hear you the whole time. I'm not sure which speaker is picking up, but we could hear you good.
They can't hear us.
Jack, you want to try give me an audio test?
Yeah, can you hear me?
Yeah, I can hear you, Jack.
Okay. So my question is.
Yeah. All right. Well, hey, I think we should probably wrap it up too. We're going on 3 hours. I'm gonna have to charge my headset. Those speakers aren't gonna work.
So Jason, when you should I just dump it then on Face with you and me?
Jack, if you have questions, type it, buddy. I'm really sorry. My audio system's not working and I don't know a quick fix.
Okay, yeah, so Jack, up to you,
But
right?
yeah, I mean, it's as simple as this. This is how you allocate.
I don't know.
Okay, guys. And Joe, did you see that that message I sent to you?
No, but while we've been talking, I took it off the screen, so I've got it either way.
Okay, cool. Yeah, and I
All
messaged.
right, guys, I apologize. Yeah, I've my setup for audio is run out of batteries and it's recharging now. So we'll continue on Wednesday. If you have any questions, email me at support. I'll get back to you as soon as possible. Tomorrow we will do a update for boot campers plus an update for everybody. So you know you can rest assured our plans have not changed. And we'll see everybody back on Wednesday. I appreciate everybody and their time.
All right, thank you.
Awesome, Jason. Thank you, bud. Appreciate it.